Good evening, everyone. Welcome to the Hurley Investments Market View Commentary for June the 7th. We are approaching the doldrums. Actually, we are in the doldrums of summer. Let's just call it what it is. My name is Kevin Hurley. Glad to be with you here today. And I'm going to go over a little bit of housekeeping items that I think are important. In 2 weeks, I will be in Denver, Colorado for the Laugh Yourself Blue autism, and I'm going to call it a fundraiser, but it's more than just fundraising. It's a public awareness. And Hurley Investments is doing a sponsorships, quite a bit of sponsorships. But the neat thing is, don't be surprised if you might see me on the local news there in Denver, Colorado, or possibly even mentioned on Good Morning America, as they usually will come out for a couple days of this. So hopefully we get some notoriety there. With that said, next week I am off with a youth group. I am sponsoring a youth group. We go out to Flaming Gorge. I let them do some river rafting. We do some skiing. We get a pontoon boat, do some fishing, some camping, some wilderness survival. So next week I am planning on being with you, but we might cut them down just a little bit to get just the nitty gritty done. And then with this week, we have canceled trade findings and adjustments for both Tuesday and Thursday. Keeve is traveling Thursday. I have interviews I'm doing Thursday. Tuesday night, we're looking at bringing on a couple more people. So we have some dinners planned for Tuesday night. I apologize, but this is the only time you're going to hear us from Hurley Investments for this week. So tonight, to start off, my first question for you is simple. What is the most important thing related to investing or trading? I want to know what is the most important. I'm just going to put thing. I'm going to put in parentheses, thing, in relation to successful investing or trading. And go ahead and send me some answers. It was funny because I asked Keeve, and it was very interesting as I went through Keeve and a couple of my other friends that are in the trading world. But I want to see, what do you think the most important thing in relation to successful trading? Wow, we have got some amazing answers. Have a strategy. Exit strategies. So William and Jim, you're pretty much on the same ideas. Managing loss trade size. And Mary says understanding risk tolerance. Maud and Mary, you're both on the same. Growth for Russ. Tight risk control from Abraham. Research equity better investing from Bill. Strategy must meet your objectives from Jim. Every single one of those has a place. Every single one of those is correct to some way, shape, or form. For me, I was going to say my most important thing for successful investing is time. Keep letting me know that first sentence doesn't make sense. What? I'll put it this way then, Keith. What is the thing? What is the most important thing? Thank you, Keith. What is the most important thing in relation to successful investing or trading? And for me, it's time. And I'm going to go back through some of what was said here. We have from Mary and Maud, managing the loss of the trade, risk tolerance. Do you have the time for things to come back? Now, I love Jim Kohler's answer, have a strategy. I use a strategy that helps me manage losses or manage my risk tolerance in trades that gives me the ability to do something instead of sitting back and waiting for stocks to come back. Not only that, in the past, I've absolutely hated paying someone to tell me to wait. I don't need to be told to wait. If I'm paying them, I need them to do something. Russ Kramer says growth. That goes back to the strategy, right? Do I have a strategy that in the downturn, I can take advantage of downturns in the market to accelerate the growth as things come back? ADP said tight risk control. I think time gives you that, but when you say tight, sometimes when you're doing spread trades or using options or have tight risk control through stop losses, you don't give yourself enough time. All learned through experience, by the way. Nothing pisses me off more than going through a trade and having a stop loss and getting stopped out for maybe a 10% loss in the stock, and by the end of the day having it come all the way back. Taught me really quickly, stop losses are not your friend. Bill Brand, research and equity before investing. Do you take the time to do a Warren Buffett type research on your position to truly find out if it's undervalued or not, if it has growth opportunities or not in the future? Very important to take the time to do your research. Strategies to meet your objectives. Does the collar trading strategy give you the time to make the returns that you want and then to protect those returns down the road? Or is it best to use diversification and just hope things come back? It's important to understand what the most important thing is for you for your investing. Now, I found this very interesting. There you go. There's what I find interesting. I received an ad. Buy and hold these 3 stocks for life. And I think this comes from Rich Man. But I'm going through and it's garbage, garbage, garbage. Oh, it'll pay your bill the rest of your life. Here's the scare part. Medical bills, there's the scare part, the third one in a row. Oh my gosh, you're going to die. And then they start talking about income. And they're talking about capital gains income. And it was really important because as they went through growth over 10 years or 30-year period, they talk about Warren Buffett capital gains. And the catch here is that you can have some that have some huge returns. 230,000 can turn to 738,000 over 10 years. But the average cost of retirement is $738,400. And what happens if it gets cut in half? What happens if you work on all this? Your passive method of income gets cut in half. Killer mistake of living off of capital gains. Getting a 264% winner over 7 years, and suddenly it gets cut in half. It's really interesting as I went through this. The great myth about stock prices, they keep going up. How Tesla, even though their losses are getting bigger, they keep going higher in price. It's going to come down. I just read through this. And here's the part that scared me. Even if you had $100,000 or even $250,000 and it gets cut in half and you need $2,500 a month, you're going to be broke in 4 to 5 years. As I come back to time, it really comes back to my quotes. Don't let the fear of time it'll take to accomplish something stand in your way of doing it. The time will pass anyway, but we might as well pass time doing the best possible use, from Earl Nightingale. Time is what we want most, but what we use worst. William Penn. As I talked to an individual today that's looking to bring some money over, the compliment he gave me is how I use my time as a registered investment advisor or as a stockbroker. I still find the time to work 8 hours a day. Some of it I get to do at my own pace in the morning at 5:30 in the morning. Some of it I do late at night when the markets are going through weird swings, when China's running our market. I stay up and I watch the Chinese Open. I watch the European Open. I watch the lunch hour. I just have these set times on my clocks so I can pay attention to news and what's happening throughout the night. The time that I'm using when markets are going down. I'm doing a ton of research to make sure that fundamentally a stock is still in place where it's supposed to be. That fundamentally things aren't changing, or the narrative isn't changing to where, hey, maybe it's time to double up on long puts or double up on your protection so that as things keep falling down, I can make up more than the stock is losing. And if it goes out of business, we're in place to still be overall profitable in a stock. A 2008 scenario doesn't bother me anymore. I now have the time and experience invested in those to understand how to use my time in a market crash like 2008. If I was to ask you over the last year and a half, what did we all learn about time in a pandemic? It's kind of my first real pandemic. That's not true. We've had pandemics in the past. N1H1, swine flu. We've had worse pandemics by way of death tolls. This was my first pandemic where it had a serious effect on our economy, where it had a serious effect on the world economy. Steve is probably going to chew me out for this one, but what is the next pandemic or risk in our markets? It was talked about today on CNBC, on Bloomberg, on Fox News. There wasn't a place I didn't see this out there. Bingo. Inflation. Can you believe our economy is growing at a 6% rate? And it'll probably go down to a 1.9% rate the last 2 quarters of the year. It'll average over 4%. We should average between 3 to 4% in the next 2 to 3 years with all the stimulus put in there. We gave away hundreds of billions of dollars to people who had jobs. $3,000 per kid for tax breaks, $1,400 in stimulus checks, $1,200 for stimulus checks when we first started. We're conditioning people to stay at home and make more money staying home than they do working. Our economy is doing great, and we're going to hold off on raising interest rates and controlling inflation until at least next year, where unfortunately inflation by that time might require 4 interest rate hikes, and one of those interest rate hikes might have to be a full 0.5%, where all this money we pushed into the system will be worth significantly less, and we're going to, for all intents and purposes, we're going to have higher prices all the way across the board. Now, as I said a couple weeks ago, people will probably start getting back to work in September when that extra $300 of federal money wears out. But what damage has that caused? If we were to look at what damage this pandemic has caused, what would you tell me? And I'm just going to put it out there, death. Not, I'm going to say this understanding that I know some people have suffered more than the people that I know. And death is never a pleasant thing to go through, whether it's a friend, a family member. That loss in our lives leaves a hole in our hearts for quite a while. But the death toll for the pandemic is not extravagant. It doesn't mean it's not important and it doesn't hurt, but it's not extravagant. Answer came in fiscal solvency. There we go. Social dependency on the government. I like both of those answers. I'm going to go ahead and I'm going to say it. And I'm going to change it just a little bit though, so that we're on this the same page. I'm going to call them smart/lazy people who have figured out that it's easier to not work and make the same, if not more money than they were if they were working. I'm going to go ahead and throw in here lack of a work ethic, which I think relates to a bunch of different things that are not going to be helpful into the future. Lack of a work ethic equals damaged self-confidence. Lack of a work ethic creates a victim mentality. A lack of a work ethic, for all intents and purposes, ruins the skills you had. Meaning your skills get rusty. When they're not used, you're not going to be the same salesperson, the same auto mechanic, the same whatever you were doing before. It's not going to get you there. The worst part about it, and we're going to get off a lack of work ethic, but what damage has the pandemic caused? The most debt ever in a presidency that has to be paid off sometime in the future. And I think we're toast. In all honesty, it wouldn't surprise me if we don't hit the 6 trillion, but we're going to hit 4.5. The way that the U.S. government runs up a credit card reminds me of a 16-year-old thinking he's rich because he's got $7,600 in his savings account. It is shocking. How you use your time, in my opinion, whether you're trading on your own, whether you have someone that's trading for you, how that time is used will 100%, in my opinion, make or break the retirement that you plan on having down the road. Walmart greeters are in place because Walmart has realized that people's portfolios get cut in half in market crashes. And if you had only half of what you had right now in the good times for your expected retirement, what type of retirement does that leave you? Last week, the S&P rose 0.6%. I thought we were going to go down. What a wild week where up is down and down is up. On Thursday, we had some pretty good economic news that came out. Let me get to my planner. Last Thursday, ADP numbers came up at 978, and the market tanked. People were getting back to work. Unit labor costs are more expensive. ISM manufacturing was close. Productivity was in line. We had stellar economic reports, and the market tanked. We were too good. Our reports were too good on Thursday. On Friday, non-farm payrolls came in only 559. We were off by 400,000 from the ADP. Private payrolls, only 492, not 650,000. Kind of ugly. Not what we were looking for. Not anywhere close to the expectations. Yet the market was up. Up is down, down is up. Hey, they're not going to raise rates until we get more full employment in place. Because apparently 5.8% unemployment is not really good. Labor participation rate fell down 0.1%. Workers remain reluctant to getting back to work. Which is interesting because I have a boy that has a tree cutting business and he has some jobs lined up, but he got a little lazy around Memorial Day. And work that he could be doing now will go to someone else, and he's going to get pissed off because, oh, they said I was going to do the job. And I'm going to have to look at him and say, well, yeah, you should have done the job. You've had weeks to get it done. You haven't communicated. Don't be surprised if we drive up to do a job and it's already done. How you take advantage of that time and how you use it can make or break your expectations in life. If anyone has any good life lessons that you can help a kid understand, I am all ears. I wanted to go over one more thing today. We have mentioned quiet periods in the past, and I want to go over this really quickly for some people. A quiet period are twofold. Usually prior to an initial public offering where a company is going to issue shares for the first time, there is a quiet period of 6 weeks where management, where ownership, or anyone that's going to receive any of these shares is literally forbidden to talk. Someone that has a relation to them is forbidden to talk. The price that's going to be set for this initial public offering, or the first time shares go out to the market, has to be done on research that was done prior and expectations from that research that was done prior. That allows a price to be set by supply and demand. It does not allow it to be set by someone that's going to receive 10% of the shares to create a story, a possibility, an expectation, a projection of the company, so that when it shoots up much higher than it should, he can then sell his shares and wait for those projections to not come true, buy back in at a much lower price. Also, for publicly traded companies, 4 weeks before the close of business, which also turns out to be about 6 weeks until their earnings, corporate insiders, meaning managers, lower level, small level, anyone that can see any of the numbers, are forbidden to speak to the public about their business, about their sales, about their expectations or their projections. Again, we're trying to let the earnings or the data dictate the price, other than hedge funds, other than the upper management in these companies who has the bulk or the majority of the insider shares. It's just a time period that allows, it's a time, right? That's what I should say. It's a time period that allows the data to speak for itself versus a person or an individual that may not truly know all the information, or that may sway the expectations of a company when that's not necessarily true. So it's interesting because I had a talk with an individual about this today as well. It was interesting to see a client start to understand better what his stock positions are doing. Always good to see. Really, when it comes to how manipulated is the stock by someone within the company, not very. That manipulation comes from outside analysts, comes from outside hedge funds, comes from outside people like myself that can push something on Reddit maybe to get a stock price to move. It's very interesting, as we went through it last week. They don't just move stock prices up, they also move them down. And it's an advantage to those that know how to make money, whether when stock prices go up or down in the stock market. If you look at the Dow Jones, we're just moving sideways. We are approaching the upper end of the range. For that reason, yet again, I'm saying our market will probably be lower at the end of this week. The S&P, same exact thing. Pushing those all-time highs. We're at the top end of our range. If I was to draw a line, which won't be particularly great, but if I was to draw that line, if it was straighter, we're pretty close to those highs. Expectations is we're probably going to come back down to that level, 41.45, a drop of about 100 points or 2.5%. NASDAQ, it has some room to run. Wouldn't surprise me to see the NASDAQ go from 13,881 up to 14,200. That gets in those ranges of those previous highs. And then from there, watch it come back down to 1380, which correlates with those ranges there, which correlates with those ranges there. This week is a pretty quiet week in the market. Not a whole lot of earnings. Marvel and Mountain, which is Vail. Campbell Soup. GameStop's an interesting one on Wednesday. Play is where I went on my first date with my wife, Dave & Buster's. By way of economic reports, not a whole lot happening here either. Consumer credit, trade balance, wholesale inventories on Wednesday. Continuing claims, CPI, consumer price inflation, which should be higher. Treasury budget, which should be lower. Michigan sentiment on Friday. It's a pretty calm week. As I was looking internationally, there's not a whole lot going on internationally either. Not that there are not some economic reports, but there's nothing that comes out this week internationally that really hit my attention. China import and exports tomorrow, trade balance, that will run our, actually that was today, so that was our, that ran today's upward movements in our futures. Tomorrow, not much that stands out. GDP for the European Union, but that hasn't really moved markets. Wednesday, China Consumer Price Index, Producer Price Index, their inflation doesn't really move our markets. Canada's rate hike or rate statement, rate decision, really doesn't move our markets. Thursday, ECB interest rate decision. It's listed as important. You see it here in yellow, or excuse me, in red. as of high impact. It just hasn't moved markets for years. Friday, G7 meeting. Other than the fact that Yellen's in there trying to say, hey, we need a mandatory tax rate of 15% on all businesses, not much is happening. That news came out today. Nothing is moving our markets by way of international news. Some news I brought to you that I found rather important. This was actually brought to me by a client. Is the Fed paying banks not to lend? A very interesting article. I'm going to tell you that you can make more keeping it in the Federal Reserve market because they need the money to give out. I know it's been extremely hard to do a refinance for small business owners, but read this article and yes, the Fed is paying banks a small percentage to not lend money right now. I found this one important. 10 things no one tells you about early retirement. Healthcare is expensive. Yep. Tapping your nest egg early can be costly. Especially if you're saving it for retirement, but you retire at 50. I need to find an extra 15 to 22 years of growth on that nest egg. If you're using that nest egg, you're losing the power of compounding interest or building upon your gains. You may have a long, long life ahead of you. It's funny because some people I've heard, well, I'm not going to live past 75 anyway. And they're 81. Probably going to live to at least 85. I don't know. I'm trying to figure out how to say this. As I sat there and I looked at him, I said, man, I thought you were going to be dead at 75, and here you are 6 years past it, and you're doing great. Shut up, Hurley. All right. Sorry for wanting to see you live a long, happy life, right? You'll spend more money than you think. I think I've told you guys my story. I thought I had 4 years of savings, found out it was closer to 2 years and 8 months. When you're not working, you got to spend your time doing something. I found out I spend more money. Housing expenses don't retire when you do. Would be good to have a house paid off. Extra income is hard to come by. I really enjoy it. It's just not really part of it. 5 questions to ask yourself. Can I really afford to stop working? I need to get a part-time job to make ends meet. How will I get health insurance? What will I do to occupy my time? Are my plans in sync with my spouse or my partner? I sure hope my wife is going to golf a lot and go fishing with me. There's a lot of time to kill. Why not have a hobby that makes you a little bit of money, right? You may need to make new friends. Unbelievable. If you retire early and other people are still working, it's amazing how your influence of friends or your circle of friends changes. And retirement can be tough on couples. Found an interesting article. Wall Street should brace for a larger than normal swings. PNC Chief Investment Officer warns. As if our market can't get more volatile than it is, here we have a pretty convincing article that we're going to see bigger swings in our stock market. Robert Shiller, wild west mentality is gripping housing, stocks, and cryptocurrency. All Mr. Shiller's trying to say is we are extremely bullish when the market is so overdue for a market crash. You can make a pretty easy observation. Justification, projection, that we have stimulated 2 market crashes if you were to put those together, we could have a 60% market crash coming up. Well, things are cheap. It used to be that if the U.S. had a sniffle, the global economies had a cold. If the U.S. had a cold, the global economies had a correction. And if the U.S. had a correction, the global economies had a depression. That's not so much anymore. We're seeing quite a bit of movement in markets across the globe, as we see a more centralized economy. Everyone's trading with everyone else. If China doesn't buy Australia's goods, they're selling it over to other Asian countries. If China's not buying US goods, we're selling it more to Europe, more to South America. There's a partner out there right now as we're moving more countries out of third world status into second world, or first world status, I guess is the best way to say it. There are less third world countries coming. Oh, I'm not saying this right. There are less third world countries financially than there were in the past. It doesn't mean that some countries that are more first world countries are not treating their citizens like third world countries. But there's a lot of wealth out there where a lot of countries are able to do something with their natural resources and the money they have. All right, what else do I have for you? Interesting, average net worth of Americans ages 75 and up. I also have it how net worth is calculated, so you can be honest with yourself to see where you're at. And last but not least, I guess that is, no. Last but not least, the big picture. I put this in from briefing.com just because we talked about inflation and what the Fed's inflation hypothesis is. It's transitory. So I want you to read through this to understand how the inflation rate can increase pretty quickly, and if they're reading a transitory rate increase in our inflation correctly. With that said, what questions do you guys have that I can answer today? Remember, we will not be having a trade findings and adjustments tomorrow or the following week. Excuse me. We will not have trade findings or adjustments tomorrow or Thursday for this week. Next week we will have them, but they're going to be a little shortened. We're going to have to see how our internet is. Any questions you guys have? William, great question, and you're going to tell you're a little bit new here, so this will be helpful for you. Kevin, what happens if we go through a market crash like 2008? It's a pretty simple answer, William. We always have our protection on through the earnings seasons, the times when stock markets are most volatile. We will have them on as we see that, and if we're not in earnings season and we start to see our market crash, we'll use technical crossovers on indexes. Once we get those technical crossovers, if it's a sustained market crash where it's going to go to 20%, you'll see some stocks fall through support levels. So let me go ahead, I'm going to pick one up really quickly. Let's go to Lockheed Martin. If we go through a correction, we can see we've got a support level of Lockheed Martin that sits right about here. That's 380, 375. Let me tell you exactly. It is roughly 374.37. 375 range. The next drop down would be 362, the 200-day simple moving average. The next drop down is going to be here at 335, and the next drop would be 6-month lows at 315. We have some pretty defined support levels. If it breaks this one, we can add a second set of protection on. We could add a third one here, right here. If it breaks 315, we can add a fourth level of protection on right there. As you add this protection, before you know it, you start making up more than $1 that's lost on your stock. Sometimes you create $2 for every dollar that's lost on your stock. At one point in time, we're making about $2.65 to $2.67 for every $1 that Apple was losing. If we have a 2008 scenario, it is relatively easy to play catch up. Even if we miss that first 10%, it's relatively easy to catch up and to make more on the way down than your stock is losing, to possibly double up on your share count, so you have twice as many shares as the stock market comes back. That may be a process of 18 months, 23 months, 4 years. Crashes aren't timed to an exact start and finish. So I hope that helps, William. Abraham, there is no surprise if inflation will come higher than expected, so we can be concerned with such type of announcement when they come. I don't believe it'll make more than a small shake. Everyone will know inflation is significant in the various segments of the economy. So the short answer is the tell will be an early Fed rate hike. And the early Fed rate hike will be the scare in the market that the bottom will probably fall out, and we'll see a pretty quick drop down to 20% for a standard correction in our stock market. We went through one last year. Markets dropped between 28 to 34% pretty quickly, and it recovered pretty quickly. How did it recover? Because we had the stimulus. It would not surprise me if we see a repeat of last year, being protective of the strength of the dollar, counteracting inflation. We get a rate hike here at the end of the year, and the markets are going to tank. It might be short-lived. It might be lived longer than expected, especially if we're going to create higher taxes so the freaking government can spend more. It doesn't look good at the end of the year. It's something that we're prepared for and we're going to be ready for. And again, I would expect it to be relatively short-lived. It would not draw out for years, but the market at a 20% drop would look pretty cheap compared to other markets that are out there. And we do have the advantage of being the best house on the city block right now. So great question, and hopefully that answered it. If it does not, please ask it again so I can do a better job. Maybe I'll unmute Keeve and I'll have Keeve answer that one for you. All right, guys, I do not see any other questions coming in. I appreciate you being here tonight. Thank you very much. We look forward to seeing you again next week. Again, do not show up tomorrow night or Thursday. We will not be here. We're doing interviews and looking at bringing on another advisor or two. We're a little on the busy. Following week, I've got a youth camp that I'm working with to help some youth enjoy some skiing, some fishing, the outdoors. We will be doing our normal commentaries and trade finance adjustments based on the internet available to me. I'll do the best I can to have some good internet so I can talk with you guys. Have a good evening. Look forward to seeing you next Monday. Take care. Enjoy your week, guys. Bye-bye.